Now for the commodities market update, we have Bolanle Olutosin now, analyst financial derivatives company, join us right here in the studio.
Hi.
Bolanle, great to see you.
Great to see you too.
Yeah, so the oil market, we're still seeing volatility, in that market, but it looks like it's just China. Moving that market.
It has been China, but
it's all about China now.
Yes, it's quite unfortunate to see that, we're still talking about this COVID situation in China. It seems like they're finding it very hard, and it's now hitting one of the biggest cities, Beijing, and it doesn't seem like they're getting a hand of it. At some point, the situation, dims down a bit, and then at some other point, it goes back up, and that's the situation we're currently facing. And I think that's the reason why yesterday OPEC actually reduced their global demand forecast to about 2.55 million barrels per day by about 100,000 barrels per day, which is not necessarily great. And what does this mean? It probably means that, when you're talking about OPEC supply, it's definitely going to reduce in the coming months. Although the good news for us in Nigeria here is the fact that our oil production has increased above 1 million barrels per day, which is great. We had struggled with a lot of, loss in supply due to vandalism and, some other aspects of the economy. And it seems like the government is trying to draw down this and make sure that this is not the case that we're facing, and we're actually benefiting from these, high level of oil prices. And
last week we saw, markets were excited that, they were going to reduce the zero COVID policy in China.
Yes.
And, that moved the market.
Yes, it did.
It looks like we're not going to see that.
It seems, well, with this now, I don't think that's happening. From the trend, when you get any slight news of increasing COVID cases in China, they usually hit back, very strongly, because they do not want the situation that happened in 2019 to happen again. So I'm sure that what we're going to be seeing from China next is, some lockdowns and, some management when it comes to reducing the surging COVID cases that we're seeing at the moment.
And what are you seeing, coming for oil prices be like, say, for the end of this year?
Well,
are we seeing
it'll
back
be
above
nice.
100?
It'll be nice. Well, it will be nice to wait to see what happens on December 4th and December 5th. I think that's what analysts are looking forward to right now. December 4th, we have the OPEC meeting, and then on the 5th, we have, the meeting for the EU sanctions, and it will be nice to see what happens and, what they actually come up with. And I don't necessarily think that OPEC would do, something major on that meeting, because they would also be watching to see what the EU sanctions would come out with. So it'd be nice to see what happens after that, and then we can predict properly where the direction we see oil prices. But in the short term, before that time, we do expect that oil prices will just range, between this $90, $92, $93 per barrel.
Yeah, it looks like a solid range.
Yes.
At this point. But let's see LNG now. We see rose about 3.15%. What's pushing that market?
Well, we're seeing, the fact that oil prices, improved demand in Europe.
Right.
And, obviously that's great for us. The fact that we do export LNG, and it's obviously great for our revenues that we're looking for so much at this time.
So badly.
Yes, so that's usually what's driving the market, but it's not so significant. It's about 3.15%, which is okay. But like I said, it's the same thing that happens with oil. You do have some fluctuations in this market, and likewise with LNG as well. It would be nice to see what happens on that meeting, because it will definitely be affected when it comes to supply from Russia. And that's just the trend in the market.
And it's interesting. We've seen both prices hit new highs this year,
yes,
but now struggling to get back to those highs.
I think with those highs it has reached the maximum level that it would reach based on what we had seen from the beginning of the year. It would need something significantly higher to push prices above and make it remain above $100 per barrel.
And we see cocoa there.
Yes, cocoa is a very interesting case. It has dipped now, and that's just because we've ended the worker strike that happened in Ivory Coast. Major seaport had already come to an end, and that's great for us, because obviously when you're talking about the price aspect of things, it's not necessarily great, but the fact that they've ended their strike is good for Ivory Coast. Although the interesting story right now is the fact that they've given the November 20th deadline for Ivory Coast and Ghana to come together and figure out what the new price of cocoa will be when it comes to adapting, the income differential and the premium price, the country of origin premium price on the price of cocoa, which is great for us in Nigeria because we're, one of the exporting countries as well. But I think the question around it is who has the, the stronger bargaining power amongst the sellers and the buyers. So, after imposing this additional price, obviously you expect that cocoa prices will go up. And right now, it doesn't favor the buyers right now because obviously you have, most of these buying countries facing a lot of challenges to do with inflation, high debt levels, supply chain constraints and all of that. So it depends on what happens. Although Ivory Coast and Ghana, they've come out to say that they would more or less stop the sustainability measures that they had imposed, in the past few years. And also, just make it more difficult for some of those buyers in terms of accessing their cocoa farms. So what usually happens is those buyers, they access, the cocoa farms to understand the number or the amount they're getting when it comes to the cocoa yield. So if they don't have access to that, obviously it hinders, some of their processes in terms of understanding what supply they're getting for their cocoa. So it just depends. And obviously on the buyer side, would they actually, adapt to this new price? Would they stop or reduce their cocoa supply? Although they introduced this, income differential in 2019, and it didn't necessarily favor them because I think it was in June 2019, and a few months after we were in this, situation of COVID lockdowns and all of that, and their farmers are suffering, and that's why you had seen this major strike in terms of the revenues that those farmers are getting. So I think Ivory Coast and Ghana is their major source of income, and they're trying to draw down and make sure they get the best out of.
Decisions actually stay with them.
Yes.
At this point.
Yes.
All right, let's look at the forex market now. We've seen the naira is quite
extremely
volatile and
extremely volatile.
Big moves up
Yes.
and down. Well, what's pushing it up this time?
So I guess, it's finding its balance at the moment from all the, the dollar situation of the false news about the dollar and obviously the change in currency that we're seeing, the naira that we're seeing at the moment. So I think there's just a lot of panic and speculation in the market right now. It's very uncertain, but I do believe that in the next few, as long as we're in this, situation where the new naira notes are rolling out, I'm sure we'll definitely see more stable situation when it comes to
and I did see, some were saying that because the CBN actually released, dollars into the market, that's why we saw, the naira actually
There's so many, that could be a possibility.
And I was thinking that could drive, speculators to want to
but I think
sell off the dollars.
Yes, but the fact that, obviously this introduction of the new, currency should necessarily not affect the value of the naira and the dollar because it's not like you're changing anything to the money supply currently that we have. But I think with all this panic speculation and people just figuring out what to do, I think there's just a lot of uncertainty, and that's just what's driving it. Ordinarily, when you see, dollars come into the market, ordinarily should ease out the pressure on the naira, but it's not happening. That's not the case that we're seeing now because there's just so much external noise, affecting this particular currency. So it'll be nice to wait and see what, how the naira balances up in terms of the exchange with the dollar.
I can imagine how the speculators and traders actually feel right now in that market. All right, let's look at our commodities market here. That's the domestic commodities market. What's actually happening there?
So obviously bad news. Prices are still relatively high and it's still likely to increase. We still have the floods going on in about 26 states, which is not necessarily great. Although all those policies by the CBN is finding it hard to find its footing with the inflation numbers, and that's just because a lot of what's driving this inflation rate is currently cost push, factors to do with the floods, to do with higher logistic costs, to do with, just the tougher business environment, and that's feeding into, some of the prices. And right now we're in the harvest season, but we're not necessarily feeling the impact of this, harvest, and that's just because, there's just so many of all these other factors that are, pushing inflation numbers up. Currently, I think prices of onions, tomatoes, rice, beans, they're currently up. I think rice goes for about 45,000 naira per bag, which is not necessarily, you know, great for this Christmas season that we're approaching. So it's going to be a tough one. I think people should just have it in mind that, you know, these prices are here to stay in the short term, and you know, we're not seeing any good news in that space.
And we're expecting inflation numbers for October anytime now.
Yes.
What's the number?
Well, so our prediction is currently at about 21.32%, which is higher. I think it's the highest it's been for about 17 years now, and it's not necessarily great, but that's just the situation that we're in.
Do you think we might see, you know, what happened in the U.S., their last CPI? It did come out not as hot as expected.
Yes, but for Nigeria, with all that is going on now, it's not necessarily going to happen, at least in the next 2 to 3 months, except something significant pushes, you know, supply of goods. And for one, you know, when you get to a point where the weather starts to favor some of those farmers and, you know, starts to favor the harvest, and obviously that could push prices significantly lower. And, you know, when it comes to higher logistic costs, I don't think that's going down anytime soon, you know, when you're seeing the oil prices, you know, increase significantly as well.
So much to unpack there, but we're looking out for those numbers to come out anytime from now. Thank you so much. I was Bonale Lutosin, analyst, financial derivatives company. It was great having you.
Thank you for having me.